With all the changes in insurance, we're starting to ask the question, are you overpaying for your insurance? And when we say insurance, we're talking about home, auto, life, health, all of the types of insurance. Today, we're going to go over how you can determine if you're overpaying for your current policy and how to fix that, some options that you have available, and some moves that you can make that can fix those issues if you think that you're overpaying. This all spurred from an article from Bankrate. They actually did a pretty good job. There's a couple debunks that we have to fix in here. First of all, they talk about the homeowners policies. The average person has about $300,000 worth of dwelling coverage, is paying close to $2,500. And that, in my opinion, is very, very accurate. Most home policies right now for home policies are in the 2,000s to 3,000s. That range is where you're probably sitting. If you're paying more than $2,000 a year, then it makes sense to talk to somebody, your current agent or a new agent, and try to figure out why those are there. And there might be good reason, you might have the right coverage, but you need to make sure that that's the correct answer. And that's actually the first reason that we're talking about this is, one, understanding what you're actually paying for. Most people don't understand the coverages, and I get it. You open up what's called a declarations page. That's something the insurance agent sent you, and it's very confusing. There's all these languages and all these things, but if you look closely, that declarations page, it's usually 2 pages, is going to outline most of the coverages that you have. It's technically supposed to say all of the coverages, but when you add bundles and packages and these endorsements, then you have these sub coverages. It might be the platinum package, the optimum, the premier package. Depending on the company that you're with, those are some pieces that you want to look a little bit further, and you might have some coverage that you don't necessarily need. So trimming the fat on things that you don't need is a good thing to look at. Now, I'll be honest, most of the time I see people don't have enough coverage, but I also see that they have coverages in places where they don't even want the parts of coverages that they have. So they're being covered in the wrong places and don't have enough coverage in the places they're really going to need it. That's where having someone that can advise you is going to be very helpful. How much time should you take according to this article? It's about an hour you should take and look at your policies, dive through and understand those. I'll link a video at the end that goes more in depth on the specific coverages that most people carry. That'll give you an idea of what you should be looking for home or auto insurance and kind of explain the pieces that most people are going to want to have and what options usually are extra. What most people are going to do is they're going to do the second piece, which we'll talk about, is bundling and shopping. But the biggest piece is your best way to combat this. If you don't want to spend the hour to 3 hours, it's to me understanding it takes longer and figuring it all out. All of those pieces, the best route you could do is talk to an independent agent. If you don't have a local independent agent that can review everything with you, then you're probably missing out. I'll put a link in the description below if you don't have a local agent or an independent agent that can help work through those. They'll do all the work for you. They'll take a look at your policy. They'll say, hey, here's some coverages I would recommend carrying. Here's some coverages I don't think you necessarily need. Do you own this type of stuff? And all of those pieces that we really dive in. I'll be honest, most of the policies that we write are because of agents that didn't write them correctly. We take the time, look at the coverages, don't focus on the price yet. That's the other piece. But let's figure out what coverages you want to carry to give that peace of mind so that you can sleep at night. That way you know you're still covered, but you're not necessarily overpaying. Again, that link's in the description below. The second indication that you're overpaying is thinking that loyalty is going to get you very far. Now, there are companies and carriers that do loyalty discounts, but more often than not, they've died off. If you haven't been with the company or have been with the company for more than 5 years, it might be time to start looking at some other options, see what other availabilities are out there, because that loyalty only brought you to that 5-year period with the majority of companies. A lot of people like to compare, some do yearly. Honestly, I say every 3 to 5 years because we want that loyalty. If you're going to shop and go with a different carrier for your home and your auto specifically, they give loyalty discounts coming to a company just as much as you would staying with the current company that you're with. So understand that loyalty isn't necessarily as much of a thing anymore. And if it does make sense, then do talk to that agent to find out if it is something that is worth looking at different options, different companies that will give better rates for the same policy, if not better reputation. Now, one of the things that a lot of people think about is financing as well. That doesn't cut there because not just insurance. All of these things every so often have changed over time. The products, as we call them, have changed. The rates have changed. And we know that the rates have gone up over the last 3+ years because of all of the issues with the cost of material, cost of medical, cost of repairs, the longevity, not having enough mechanics on hand. You go to your dealership and they're backed up a week. So there's lots of things that have created a lot of issues. That means more rental car insurance that you need, more all of these pieces. So the cost is coming out of your pocket, and there are good reasons for some of them, but not all companies are rating them exactly the way that they should. It's a profit margin company. These companies are trying to make income based on insuring people. There are some limits that they're going to have where companies or the government is going to say, no, you can't do that. It's too much money, too much profit, but it's very, very hard to see that. And these companies may be taking advantage of the fact that you think that you're getting the best deal with them because they're the best fit. I recently shopped my insurance and I found $1,000 a year cheaper on my own. The average person, according to most of these articles you'll read, are going to say between $400 and $700 a year. I happen to be paying more. I'm still not ready to switch companies because I have that package the way that I want it, and it is more expensive. The companies that I'm looking at that are cheaper don't necessarily have the packages I want. That's where that agent is going to come into play and help you decide if those make sense to switch to or to keep what you currently have. That brings up the third way that you may be overpaying is you're not matching the coverages to what you need. There are some things of the future thought. So if you think you're going to have a larger income, if you may have a potential of some money coming in or anything that's not necessarily tied to a 401k or to any type of retirement, so anything that someone could sue you for, you want to look at those values and think, okay, in the next 5 to 10 years, do I need this much coverage? Is that enough for me to protect myself in case I get into a lawsuit from a claim that I may have been at fault? Those are the scenarios you want to do. Now for medical, it's a little bit different because you're thinking, okay, if I get injured and I have this deductible, can I pay that deductible? And then do I have a max out of pocket? Am I going to go over on that? It's a gambling game. You're really just playing dice and hoping that you don't get hurt, you don't injure someone else, there's not any lawsuits. So just match the coverages as much as you can to what you have as far as what you need to insure. Yes, we need the house insured. Yes, we should have water backup. Yes, we need the car insured. Yes, we do have to protect the loan on there. There's all of these pieces that the agent's going to go over it with you and do an evaluation to help you understand what is really required, what is needed, and what you should think of options to maybe carry. And then you can decide the best route to go from there. Number 4, don't be afraid to unbundle your policy. I like to bundle. Most people like to have the same company for home, auto, umbrella, life insurance, retirement plans, all of those things. And a lot of companies love that because the more policies that they can stack on, they're going to give you discounts and the better chance that they are to not lose you as a customer. It's complicated once they mix them all together and then you try to shop it with someone else. Even the agents don't love doing that, but it's the job, right? It's kind of the role. If you want a new customer and you want that customer to be happy, then you sometimes have to unbundle and untwist all of these things that an insurance company created to keep you longer. And when you do that, you're going to likely find that sometimes unbundling a policy, having your car insurance with company A and your home insurance with company B and other insurance with company C, it is a lot less expensive. I've got several customers that last year, because of all of the rate increases, we didn't necessarily want to leave certain parts with a company and we didn't want to necessarily pay more. So we were able to unbundle them and make sure that we got the best rate, but we also had the best policies for what we were looking for. The 5th way that you're likely overpaying for your insurance is more medical than anything. And this happens with home and auto and all of those things. But the article actually makes a really good point because the writer said that this is a scenario that they ran into where they had a huge medical bill and they ended up paying over $10,000 out of pocket because of the hitting the deductible, hitting the max out of pocket. And that means that they're paying that bill. Essentially what they're saying is you should have an emergency fund. It's hard. Trying to save up, trying to pay for your bills. Average person is paying 6 to 8% of their income to insurance just to survive. So just us working is paying to get to work and paying to pay our bills, have a couple burgers at the store and all of the things that we need to do to live, maybe going to a movie, but then we're also paying a chunk to our insurance. And then we have to pay out of pocket even more because we couldn't afford to pay the right coverage. That's where the agent comes into play. They need to give you that advice. You need to make that choice. And sometimes having that choice means that you do take the risk. In those cases, having an emergency fund, roughly 10,000, is mostly common. That's probably the most normal that most people say we need to save in case an emergency happens. And when it happens, guess what? We've got to replenish that emergency fund to pay if there's another emergency the following year. Obviously, you're not going to plan on having that every year, but then if you do, that puts you in a really good position to not have to carry the extra insurance so that you have enough money to pay in your case if there is an issue. Now, if it gets crazy and it's these $100,000 bills, that's why you have the insurance, is to protect you in case something like that happens. Car insurance, home insurance, life insurance, health insurance, all of those things are in the emergency cases. They're not those one-off $5 here, $10 here issues. It's really when you have those major claims that you have to use it. And in those cases, that's where it protects you the most. I agree with most of this article, the final thoughts and everything. If you're planning to retire soon, if you're planning to have a really good policy, if you don't want to be stuck with a $100,000 bill when you're trying to retire in the next 15 to 20 years, then it makes sense to have the right policy in place. That's where your agent is going to play the biggest factor. Talk to your local agent if you have one. If they're independent, even better. Have them shop around and see if unbundling or see if changing some of these policies makes sense. If you don't have one, the link is in the description below where you can start working with one. The two videos that we talked about that is going to give you more direction is understanding the coverages that you need to carry. For home insurance, I've got my Home Insurance 101. For auto insurance, we got the Auto Insurance 101. Those are going to dive in deeper and help you understand which coverages are going to be the best or most common. I'm Mark with Think Insurance. I'll see you in the next one.